evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we're at the 5th of July, 2022, just after 7 p.m. As you can see, a little bit bounce back in some of the grains, which were down dramatically today. You know, I learned, and I want to share this with you, after 50 years in the business, certain events you don't do. In grain markets, you don't go through the 4th of July holiday with any position. You never know what's going to happen, but typically there's a huge move right after the 4th. Knee high, grain, if you get it, don't get it, too dry, too wet. Everybody looks at that time and they move on the market. I have been killed playing those positions earlier in my career. I learned to avoid them. The other thing in the stock market and like, it's a difficult time when you are closed in America, mostly, we have electronic markets that are open, but they're really not representative of world events. Yes, they're trading, but the big boys don't put their positions on at that point. They'll come into the market when all the cash markets, bonds, everything's back to open, banks are open, and still coughing with the COVID, and the stock market. So as that goes, you've got to learn to play this accordingly. And I learned, I back away, and then I start coming in afterwards. Why? Because the algorithms are going to reestablish themselves in the markets, and you don't want to get caught in them. You don't have to believe me on this. Got plenty of experience that most of you don't have. I know how to trade bear markets. I've been around them. Bounce today was a wonderful bounce. I think it's set up in stock indices a trade bottom. I didn't say a trade change for the long term, but a trade bottom, a washout bottom. Let's go and take a look. On the S&P, you're still in an overall downtrend on the weekly charts. As long as you stay under the 18-week average, I keep a downside bias. When I look at the daily charts, you're unable to break back here. I'm seeing this. You're sort of caught between this, caught right through here. Interesting. That's what I could say with it. Today's action, you had an outside day to the upside. If you were there early in the morning, you're watching the stock market come apart. When I got up to do my reviews early in the morning, we were nothing in a big decline. As I did my updates, the market started nosediving. And that's new money coming into the market one way or the other. Well, later in the day, the market started seeing a reversal of that, and all of a sudden, you reversed the day. So those that sold into the break got their butts handed to them. I just stay away from that. Now what you have is higher lows, higher highs. That's bullish until you take out the lows of today, Tuesday. Where's the resistance? You're fighting at it, the 18-day average of closes. If the market can clear it, look for wherever the Bollinger Band is as your next resistance. But I'll give you an edge. Open up your weekly charts, and that'll be the resistance point, the 18-week average of closes, in my opinion. In momentum, you've got it still pointing up. So for the short term, bullish, going home. Higher lows, higher highs on the daily chart, looking for further extension of this. I'm looking at the Bollinger Band and the 18-week average as the potential targets. NASDAQ, the same thing. Higher lows, higher highs. Never broke as much. The tech stocks all day were strong. I'm going to cover Google in the Spider ETF because it was a leader today. And the Dow, same thing. You came down, you fought, you didn't get through these old lows, you came back. Okay, I can argue that if you're buying right here at 30,839, you're wrong if you get under 30,406. That's an awful big risk. I am not prepared to tell my clients risk 500, 800 points in indices. It's too much money. So I wait for a better setup, and that's exactly where I'm at on charts like that. In the Russell, outside day to the upside, higher lows, higher highs. The market, I think, is going to be bought at 1729, but you have to have a stop 50 points away. That's an awful big stop for me. That might not be for you, but for somebody like me, it is. So I wait. But on all of these, it's the upper Bollinger Band and the 100-week average that I think the resistance will come in with. The VIX didn't go anywhere. It tried to rally early on. Well, if you're rallying back in the stock market, you're going to fail here. Now, if you get under 2669, this break low, you'd have lower highs, lower lows. The potential is back to the 200 week, this gray line that I'm going to draw right there with my finger, and the dashed line, which is the Bollinger Band. It's also got support right here at 27.24. So it's going to fight a battle right in this zone. I don't think it's going anywhere dramatic. Then if you've watched the 10-year bond differential, they're about 2-3 basis points apart. Nobody's talking they're going to invert here. Amazing to me. The whole market has slipped back rather dramatically on interest rates because people are scared of that recession word. Rightly so. I wrote in my newsletter last week, and I said it to you on here, that the marketplace is doing the Fed's job to a degree for it. It is pricing in the recession. And you may not have to go in 2023 with as many rate hikes as people thought. We don't know if that's going to be the case or not. I happen to think our economy is going to do well, even with quote unquote a big slowdown. Can we get to a recession? Yes, but you do understand the term means you've got to go from this 3.6 right now, unemployment rate, and we get another unemployment report this Friday, over 4.1. You need a half-point increase in unemployment and 2 consecutive quarters of slow growth. We don't know what the GDP is yet for the last quarter. We're going to find out. I'd rated 50-50. It could be another slowdown quarter. Remember, even if you get 2 of those, you need the unemployment to come in. What if you get then a bump in one of the quarters? This is how it all works. So you've always got to pay attention. What I know is I'm seeing in business everywhere a slowdown. I talk to my friends. What are they thinking? What are they doing? Some of these guys are big businessmen, and they're telling me they're nervous. What's going on? Business is good, but it's not what it was. The pullback. Okay. Do I think unemployment is going to take off? No, because we're coming out of a pandemic environment that none of us have seen in modern times. And that means we're short on staff, but what companies do is they don't hire more. You do more with less. So you're not quick to fire the employees you have, but you're also not real fast to hire ones you're losing. Does that make sense? Because that's what I think is going on, and I think that's why we're going to stay in pretty good shape in the United States. It's not the same everywhere else. I teach you do not buy Bollinger Bands. Let the other guy do it. The odds of staying over a Bollinger Band is 5% of the time. I want to be the casino. I want to win 95% of the time, not be the guy buying up there at these numbers or selling under them, watching the market spin away from me. If you have to buy, you're buying on the pullbacks. Let it embed. Then you're coming in on the breaks. And if you don't know what embedding is, go to my www.iraepstein.com. and look under the word education at the enhanced Bollinger Band course. You want to learn what that is. That's really important. Dollar index, overbought over the Bollinger Band. You buy it. I don't want to buy it. I'm certainly not bearish, but I'm not going to tell my clients to buy it up there. The money, today you hit the Bollinger Band. If you were my client, you get the elbow in the side as we're sitting side by side. And what would I be doing? I'd be telling you, you liquidate a big chunk of your position. And you'll go to me, why? The market's going to soar. I go, nah, it'll back off from here because it only stays 5% of the time over the Bollinger Band. I didn't say you got to take all of it off if you're embedded. If you're not embedded, yeah, I think it's time to take your position off. When I look at the eurocurrency, it's the flip-flop. First of all, you're not even trending. You're under the band, you're oversold. It's time to let the other guy own it. All day long, I'm hearing, folks, we're 20-year lows in the euro. We're at 102. Are we going to parity? If we are, fine. But I don't want to be short under a band. Up on top, yeah. But I don't even have a sell signal. I have a collapse signal. This is called a vertical price decline. Why vertical? Because you went from 106.78 straight down to 102.89 without even taking out prior highs. vertical decline. You can't catch those. I welcome you to try. You won't succeed. Most of the time, if you catch it, you get bounced out along the way. It is not the ideal trade pattern. You always got to look for that. British pound today. What would I tell you if we're next to each other? Well, Boris Johnson days are probably limited. He's lost two of his key cabinet members. He'll replace him, but his credibility is shot. This appointing somebody that he did to a position that has a terrible reputation. How could he not have known? He probably owed him something politically, thought he could get it through. I'm not in the UK. I don't know. I'm an American, not a Brit. The politics. At the end of the day, politics are dirty and they're everywhere, right? If you like a politician, you have a big problem. I don't. You do. And that's how these things happen. It wasn't overlooked. If you believe that, my God. So, are we looking at the end? I didn't think so earlier on until this event. Now I think we're looking at the end. Yeah, I think his credibility is out the window. I think this was the Federer crop. Over. Bitcoin. Today was the day that I told my clients, don't want to be short anymore. You lost the embedded reading. Why would I hang around that? Give me a reason. Okay, you're probably going back to the 18-day average of closes. That doesn't mean I told them to go long. The trend has been down, but I don't mind telling you. I can prove it in my newsletter. Put it out last night. Don't want to be short anymore. As it turns out, I was eating my words early in the morning when the market was down again, and I'm going, boy, did I get that wrong? All my work was saying it's going to lose its embedded reading. It snapped back, and I feel pretty good about it now. Brent versus WTI crude. Take a look at this, 657 difference. I mean, it's pretty powerful. This is SEP versus SEP, by the way, okay? So got month against month. In the August Brent, why do I have August Brent? That's wrong. I thought I changed it. I can't do that. It's off the board. We'll go to August WTI, but my differential between the two and SEPs are right. August WTI, you're in a bear trend. Now, you're in the zone where supports should show up. Right here, in between 101.33 down to 99.07. I don't care if it's the low or not. This is where the professional money is covering their shorts. Has the market been in a downside? Yeah. For how long? Well, look at the lower highs and lower lows that you recently got. This big break today, days like this are often washout lows. Some people will say, oh, we're going down to $65. I saw that. In fact, it's still there on Bloomberg. I get it if the U.S. goes into a full-fledged nasty recession. I think they're right, but I don't think we're doing that. I gave you the reasons for that earlier on. Gasoline. I am now waiting to see when the gas stations drop the price. It's time. They got everybody for the 4th of July. They made their money. They can now come down. This market's been in a slump. Okay, they'll have Labor Day. They'll have regular driving. But you start watching gas, buddy, you're going to see those prices start slipping on you, and that's what I'll be looking for. So, I pride myself that what I'm all about are the leaders, and I want to use that term very carefully here, leaders into what I really do. In the morning, between 5:15 and 5:30, typically, I start recording my futures update. The idea there is to give you trade ideas based on fundamentals, which I cover the first thing in the morning. Then we go to the chart action. In the chart, rather than me being a broker, I want you to buy here, sell there. I show you why I want you to buy, where I want you to buy, where the stop is, what type of stop to use, and what the objectives are the markets are. I do it first in the futures because I don't think you trade the first half hour of the day in spiders and ETFs. That is where you need to get, as I'm going to repeat this, that is where the pro money has to come back into the market. Let them do that. After 9, you start your moves. I cover 40 charts of both. Stocks galore. I'm always rotating the different stocks, giving you the rationale of what I'm doing, why I'm doing it, where I think it should be done, and how it should be done. You get 48 videos. Folks, you're going to spend more on your Starbucks coffee than what I'm offering this for. All you need to do is go to our website under the word education. It's listed there. It's intentionally very inexpensive. In addition, you can watch right here. Move your cursor up. It'll take you there. For those of you in Australia, and we have a lot of Australian subscribers, I will be in Aussie Business TV tomorrow. So, Sky, obviously. So, look for me. I'll be there Chicago time. That's what I know. 6:15 p.m. Okay, that's Central Time. So, you know the time difference. It's dramatic. But I'll be there talking the markets to you. Last time I was on Sky Business, I said in the stock market, go to cash. Wasn't a bad thing, was it? I'm Ira. You have a good day.